Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Monday, January 31st. So, end of the month. We are now through with January. Kind of weird that January or month end ends on a Monday, but that's just how it lined up this month. And really big move today, especially in the big growth areas of the market. I should say not just big growth, but small cap and large cap growth, just to define that a little bit more correctly. Just huge move by some of these areas that have just been really beaten up. Also, the VIX gets back below 25. I mean, remarkable move one day. That's a down 10% move in the VIX. That's pretty incredible. And then, something that we talked about over the weekend, as well as in the midday video for Tribeca Trade Group members, is that there's a lot of portfolio rebalancing that we heard. I think JP Morgan estimated that it was something like, and I'm probably getting this number wrong, but I think it was something like $35 billion going back into equities. I think we heard about that number about midweek last week. So that was true to form in terms of some equity buying that took place. Big MOC imbalance, market on close imbalance, both on Friday and today. By the way, risk disclaimer in front of you. Everything that we're talking about is for information purposes only, not giving out any advice or recommendations. Everything that we're talking about here is for information purposes only. You could read the whole risk disclaimer here, or education purposes only, I should say. So yeah, if you look at some of these moves, I mean, they're kind of startling, right? IWM kept pace. Both IWM as well as IWC, the microcaps ETF, just on fire today. Very, very strong. Up 3% for IWM, up 3.3% for the microcaps, and up 3.2% for the Qs. Very, very strong day. Bonds weren't a factor at all today. They were down about 0.5%. Gold, silver, not much to talk about there. But yeah, there's your move in the VIX down 10%. So let's talk a little bit about that in the indices. And just like, I mean, it's crazy how quickly that happened. But, from where we were on Friday at the low of the day, things were not looking very good midday. And it's one of those things where, my opinion is you kind of have to just, even if you haven't been trading that much, you just kind of have to wait it out, and you have to just be watching and observe and be pretty objective. You can't really stay too, too set in your ways in terms of, saying, hey, I think this is going to happen with the market. You make that judgment, and then you have to adjust to that new information, especially as fast as this market is moving. I mean, we were very close to taking out, well, not so much in the S&P, but more so in IWM. IWM went through Monday's lows. So that wasn't the case for the S&P. That held up a little bit better. It basically tested where we were. I think that was on Wednesday. And that was Friday's price action. And then we kind of just built off of that. There was a nice little retest here, right? And this was something that I mentioned earlier, is that you did have a support level. I think at one point S&P futures were down about 0.5%, right around 7-8 o'clock in the morning, and they came back and kind of held in here. 4,390 was the level that I mentioned. And we held that and just basically got off to the races thereafter. So S&P futures finished up 1.6%. Where are we going at this point? Well, tomorrow is first of the month. So traditionally, that wasn't the story in January, but traditionally, there are first of the month type flows, right? So new money is put to work in the market. So that might be a little bit of a catalyst for tomorrow. And I think really, we're also going to have some more big earnings reports that are coming out. Today was not like Cirrus Logic came out, and they just had a real good earnings report. That was also kind of fueled the move too, is what Apple did and a couple other names towards the end of last week. So we're going to get more We're going to get more names that report earnings, specifically Google and Amazon. But before I move away from the S&P chart, yeah, I would watch 45.29, and then there's a Virgin point of control, which could be a great place to take some profits, or to take some more profits. 45.56. That could be a place if you want to stay nimble in this market, right, and you've got some longs on after the last couple of days, that might be a place to kind of lighten up and just to see and observe what we get for the rest of these earnings reports. Really interesting so far. This market has been, the last week or so, very fast moving. Here's Google, right, which is going to report tomorrow. They are expecting about a 5% move for earnings. So 200-day moving average. This will be an interesting report. Here's the how Google has reported previously. Right, you can see it's usually a pretty decent quarter. The last 5 quarters, again, I'm always looking in this right column where it says price change. That's mostly what I care about, right? Is what happens with the price, right? And that of course is dictated by what their earnings quarter is, what their guidance is, and what they say on their earnings call. But really, I'm most concerned about the price action, right? I am a trend trader, and that's what I focus on. But it looks like of the last just straight green, the last 5 quarters, when you move back to like the last 10, you're looking at, I think, 7 out of the last 10 quarters. I think that's 10, 2, 4, 6, 8, 10. So 7 of the last 10 quarters have been positive, right? And then Amazon, which is going to report later in the week, you could see that they don't have that type of consistency. The last 10 earnings reports have been, only 2 of them have gone up, right? 2, 4, 6, 8, 10. Yeah, there's only been 2 times. So I'm really, if Amazon is, if Amazon does something great, wonderful, so the upside, that will also, help fuel the market a bit. But I'm just reading a headline that just crossed Accenture because I just added a position of Accenture, but I think it's just their COO is being changed up. So hopefully that should be okay. Yeah, might as well go over that chart too. But yeah, I think really Google and some of the other names that report, Amazon will be interesting, but I think you just kind of have to remember that Amazon has not been a great performer on earnings day. So let's get over to the Qs. Or if you want to look at NASDAQ futures, right, this will be interesting too. We're going to have so again, much different picture here, right? You go back to the S&P on the daily chart, we got to move back above the 200-day moving average. Now you have something to work with, right? Now you have a stop and to know that, let's see if we can build off of this, but you know exactly where it's not going to work, right? Well, especially for me, it would be a move back below the 200-day moving average, right? That would get me to be a lot more nimble and not have too many positions on if that happens, right? Have these rules set up, in your mind. Everybody has different rules. For me, that's one of them, is that price needs to stay above the 200-day moving average. And I do that on an individual stock basis, but of course for the market, I want to see that too. Qs are not there yet. Right. So we go back to the Qs, one more day of price action like this, and we could get back above the 200-day moving average. I'm not saying that that's going to happen tomorrow, but man, just this market is moving very quickly, right? So that's right around 365.90. If we look at the 1-hour chart too, and NASDAQ, which I often like to do, there's also a VPOC to look out for, which is 371. There's another one up there at 385 too, but that's where I would be kind of possibly looking to kind of take some targets and some things. All right, IWM, I might as well go over that one. I mentioned this in the very beginning of the video that IWM took out Monday's lows, and I was really surprised when this came back like this, because I did not think that this was a good sign intraday on Friday. But hey, just like I said, you got to stay neutral and objective with what you're doing, and respond to the price action, because it's very difficult, right, to know how this market is going to shape up, from where you are at afternoon versus where you are at the end of the day, like we saw last week. Very, very whippy price action, right? That might change a little bit with the VIX coming in a little bit, but that's how it's been. It's just been very, very whippy. Notice where the price is right now. We're just above value, right? In IWM, I would watch 199.74. So if you like playing small, this small cap ETF has been great to day trade, right? If you like to day trade and you don't want the individual stock risk. Certainly the small caps can be traded, and you could use the leverage ETFs, TNA or TZA for triple leverage if you really want to go that route for a day trade. But just trading the ETF, you're getting a lot of volatility to move. So that would be the level that I would watch, 199.74, right? And notice that this is basically just back to where it was a couple times last week at the upper end of the range. So wanted to go over the indices first. Let's talk a little bit. I just want to see what that VIX looks like, and then we'll talk about a couple names, and we'll talk about my trades. All right, so here's the VIX, right? We talked about this in the weekend video, that it was leaning to the downside, but I wasn't really sure that we would really kind of move back inside. That's a good looking move at this point. 2483, right? If we get back to this range, 21, 22, then volatility kind of returns to more a normal pace, right? So 21, 22 will be something that I'll be kind of watching for. But I think that that's a really good move the last couple of days, and it looks more and more like just a big volatility spike. But that's what it's looking like to me. After we've kind of settled in here a little bit. VVIX is always something that I like to just glance at too, right? This is the volatility of the VIX itself, so the second derivative of the VIX. Notice that this was this moved down decently too, all the way to 125 from where this was at 170. So similar, right? And that's a good sign too. We don't want to see too many divergences. Oh, I got a divergence. I got a bullish divergence to go over. Let's start with the big guns today. That was what I traded today. Apple. I was looking for some follow through activity. All right, so here's what I did. I don't like to usually trade in the first 15 minutes, but things were just moving very quickly. I took a position in Apple. It worked well. I took a couple targets in it. So 174.75, and now I'm just looking for continuation at this point. And I would even add something, like if we get something like an inside day tomorrow, right, where it's kind of halfway in between, then I would possibly look to add one of the targets that I took today. Right, that's that would be the goal for that. As I've said, and as I've kind of explained to members over the last week or so, that being nimble in this market is, while the volatility is still this high, I would like I said, I would like to see the VIX get closer back to 20. But while it's still around this high, I think being very nimble helps right now. What else? MasterCard, that was one of the our watch list names. This worked too to some extent. It wasn't up 6 or 8% as some of the momentum names were, but I'm okay with that. I'm okay with a winning trade, regardless if it's only up that much. And I think I did buy this a little bit when it was down on the day. My entry price was 381. And climbed up to 386 for the day. Here was our watch list that I provided. I did not provide a watch list to members a week ago, because there was just too many events going into last week. But I did provide one this week, and things like I included a couple names, tech names. Datadog up 6%. IT was another name that I'm interested in. Accenture. Right. So why do I keep going back to Accenture? Because they had awesome earnings, a few weeks back. It was maybe more than a few weeks, about a month back, more than a month. Sorry, month and a half ago. That was all the way back in here. Stock ran up a little bit. So I've been watching for this name to kind of bottom in here. And I like this, right? We talked about this. I believe in Friday's midday member video, we talked about Accenture, we talked about Datadog, right? There was a big roll of options that happened, but I think this is a good one to watch in here. I like how I like the names in tech and in growth that came into the 200-day moving average and held, right? Versus just slice through it. This thing did stop around the 1 hour VPOC, right? So there wasn't much to do after 10 o'clock in the morning in this name. So maybe one to watch for tomorrow. Watch to see if we can maybe get above today's highs. often this is the case, right? When you have overhead supply like this, and that's why I went over those virgin point of controls in both the S&P and NASDAQ, right? But this is a similar example, right? A move up to a 1 hour VPOC, and the name really didn't do too much from there, right? That's overhead supply, right? And that's a big level from from 2 weeks ago, right? This is the VPOC. This was the value area from 2 weeks ago. Notice that price did not pass through the point of control at all, right? That's what leaves a virgin point of control behind, a red line, because price did not go through at all or return to a high level of volume, right? That's what a point of control is, by the way. Point of control is where the most volume occurs in a period, right? And that's actually from 3 weeks ago. That's from this volume profile. All right, so that's Datadog. That was a name on the watch list. Also, I got a question about this too. Look, by the way, look at XLK, go right up to that VPOC, right? So again, these provide a great roadmap of where do you want to be taking, where I want to be taking some profits. XOK, the technology ETF. This is a great question. And this was what I was thinking at some point last week too, towards the end of last week. I'm like, hey, the longer that we stay around in this 200-day moving average and not able to get over it, I was thinking that this may be a possibility of a bear pennant or a bear flag, right? And that's why I said you have to change your viewpoint as the price dictates. But good to see this. And someone asked me about XLK because I said, believe it or not, the technology ETF was one of the few sectors that were over the 200-day moving average. And someone said, hey, well, couldn't this be a bear flag? I said, hey, it could be, but we don't have that confirmation yet, right? So now looking at these things, you could rule that out, right? It doesn't mean that I don't think that you could rule out whether or not we're going to get a retest of the lows. That's certainly possible in the next, at some point this week and the next couple of weeks. You can't rule that out either. But as of now, like this is no longer a bear flag or bear pennant. So that you could rule out, right? But I would keep in mind, right, that is a scenario that could happen, right? And we'll have to see how these earnings reports go. But I'll tell you, that's a nice move. And that was something that I stumbled upon this weekend. When we do our screener, right, of relative strength, names that are above the 50 and 200-day moving average, some names are going to change. But the only sectors, right, when you look at the big sectors, right, which is in here, right? So these are called the GIC sectors, right? These are the main sectors in the S&P. There's only 3 of them that were above their 200-day moving average. XLK was one of them, which is the largest weight in the S&P. XLU, utilities, and XLV, that's it. Those were the only things that, and just by just barely, XLV got above the 200-day moving average on Friday. So that's where we are right now. Well, I shouldn't say that's where we were. That's where we were coming into the week. But there's a lot of technical damage on these charts. Right? I was trying to point out a couple of setups that I saw in the semiconductors. Semiconductors got back above the 200-day moving average today, so that's a good sign. I like to see that in the semiconductors. But I thought Marvell was a good setup today. Right? That came in and touched the 200-day moving average. Was a nice setup, I thought, off the 1 hour chart. Basically went all the way through, almost all the way through the value area. Tesla, I thought, was a really good setup for today. I really didn't understand why Tesla was getting hit so hard towards the end of last week. It didn't make any sense to me other than a lot of things being sold off over the last couple of weeks. But I didn't get that day after earnings how it was taken out like that. So what I said this morning was, hey, even though this thing was up I went right off the, right in the beginning of the day, it was up 4 or 5%. But I said, you know what, there's not any resistance in this thing till about 940. And that was something that I said a couple times today. And I hope some members got to play that one a little bit today. But this is what I said right around 10:26 this morning. I said, I don't see any resistance till about 942 to 955, depending on the time frame, right? Here's where we were, right? And if you look at this, so remember 949 on the 1 hour, right? And look, we got right into the bottom of value, right? Which is the 942 level. That's where I came up with that level. And then of course, if you want further, there's a VPOC up here, but it's got to get through that 942 level first. Then I would watch, we're very close to this 1 hour VPOC, which is at 950. So I think that move for the week is realized. But if you want to push it above there, watch what happens around this 949 level, as well as the 942. Again, real, these moves are fast. These moves are not taking a couple days, 1 day, right? So that's it. A couple other names too that I thought were interesting, but some of them are a little bit tough because you've got earnings. But Ferrari, right, this is another name that just a lot of these names got beaten up. But again, like I said in the beginning of the video, came into that 200-day moving average and hung on to it based on Friday's close. So this was a little day trade for me. Didn't move that much, unfortunately, but I thought looked pretty good. What did I put a? Oh, probably forgot the symbol on that one. I do make mistakes. All right, guys, that's it. I was watching. I didn't stick with, I didn't want to put on, 5 trades today, but I thought Cliff's Resources was interesting too. I thought that would be a day trade. It just really couldn't pop over this little digestion here, but it is above value. If you want a steal name, you could trade that versus 1681. All right, guys, I'll leave it there. So again, really nice day, really nice way to start the week. I think that, bring this back up, portfolio, end of month portfolio rebalancing definitely was in play. That's just a 1-day event, and we'll see what the first day of the month flows are going to be like for tomorrow. And that's it for January. I could tell you, I'm going to send out a video to members later tonight, just about my performance. I did not have, I had a horrible January. So it's something to build on from for the rest of the year. Sometimes you need to get kind of slapped in the face when you're doing stupid things. Mainly my losses came from doing, trying to trade out of a mistake that I made in the first week of the year. And I ended up digging a hole for myself, using options. So, that was in the first, mainly the first week of this year. And, mistakes happen, and you kind of have to learn to correct those and get back to, one of the things that I really thrived on the last couple of years was not having any big losses, really trading disciplined, right? And trading mostly stock instead of options. So I got away from that a little bit for whatever reason, the beginning of this month. Some damage was incurred in my P&L, not so much for members because it was a mistake that I made in my trading account, and then try to trade out of it basically, and it didn't go well. So had nothing really to do with members or anything like that. But hey, listen, these things happen. As I have said in some of my other videos this week, that hey, you're human. I made a mistake. It cost me money the first half of the month, and I look to just kind of move forward from that and realize that hey, I know the mistakes I made. Let's build off of it, and we'll go from there. But it happens in trading. Okay, guys, have a great night, and I'll see you tomorrow.